is Eric Stein with some thoughts on the IMF World Bank meetings that I attended last week. Three main focuses for me. Number one, the meetings seem to always have an area of focus. Last year it was Liberation Day. In 22, it was the Russian invasion of Ukraine. This year, eyes were clearly focused on the war in Iran and all the ramifications in oil markets from the war and the closure of the Strait of Hormuz. As the meetings were going on, there was lots of talk of various announcements coming from President Trump and other members of the administration, as well as the Iranians, that were moving oil markets and other markets. I think the broad consensus among the investors was that the war likely is going to be contained and will be over at some point soon. However, there is a significant tail risk if the strait remains closed for longer, that oil prices will take another leg higher from here, and that we'll see significant demand destruction, not only in Asia where it's occurring now, but also in Europe. And we will see prices increase significantly in the US that will further weigh on US consumers. Moving to financial markets, what's interesting to me is that most financial markets across equities, credit, as well as emerging market assets are broadly back to where they were. Some are even at higher levels or tighter spreads than where they were before the war in Iran, with the notable exception of two markets. Interest rate markets, both in the US and in the Western European markets, remain elevated, and oil markets remain significantly elevated than where they were before the war in Iran. And then the third point really focuses on Europe. Lots of talk about European defense spending, which will increase, maybe not as much as some expect. But I thought the most notable thing on Europe was really the short-term outlook in Europe. Lots of talk about the ECB's reaction function to inflation and concern, particularly given Europe is such a big oil importer. My own view is that I'm less hawkish on the ECB in the short term unless oil prices spike significantly from here. I think the ECB will look through the temporary increase in oil price, and I'm more concerned about the growth outlook in Europe. Lots of talk about reforms, capital markets reforms, and the Draghi report. I don't see Europe being really motivated to grow. They'll do some more defense spending, but I don't see structural momentum for Europe to grow at a significantly higher level. Thanks for listening and look forward to talking with you soon.